What's going on? Anthony Campos back again. Hope you guys are doing well. Hey, I'm actually going to be remaking a video I made about total cash to close. I wanted to improve on the last video I made about total cash to close. So keep in mind, this can vary depending on your specific situation, right? I don't have the details of what's going on, but this is for someone that is looking to purchase their home, their first home, or maybe someone that's purchased before and they're not quite sure or don't remember the total cash to close. So I'll try to make it as simple as possible. So total cash to close consists of two things. It's going to be your down payment and your closing costs. Closing costs are separated by two things. It's going to be your recurring closing costs and your non-recurring closing costs. So we'll start with the down payment. The down payment, depending on your loan amount, is going to depend on what the minimum down payment will be. For example, a VA loan will be minimum down payment is $0. You don't have to bring in any down payment on a VA loan. For an FHA loan, the minimum down payment is 3.5%. Conventional, you can get away with 3% down, and sometimes, or usually, it's 5% down minimum on a conventional loan. Now, you can have the down payment gifted to you by a family member or a friend, depending. So you can technically come into the property without having to bring in your own down payment. You can have someone else cover it. You don't have to have a VA loan to bring in $0 down for a down payment. So that's down payment. That's one portion of your total cash to close. Now you have closing costs, which, as I mentioned, consist of non-recurring, which are one-time fees, and recurring closing costs. So we'll do the one-time fees, and that's going to be non-recurring. Non-recurring closing costs consist of escrow fees, title fees, an appraisal fee if you're the one paying for it, home inspection fees, any other inspection fees that you're going to pay one time when you're buying the home. If you are buying down the rate, that is also a one-time fee that you only pay once, and you don't have to worry about after closing escrow. Now, recurring closing costs are fees that you're going to continue to pay even after you close escrow. So that's going to consist of property taxes, homeowners insurance, and sometimes HOA if there's any HOA dues at the property. Now, you can get away with not having to pay for recurring closing costs, but you're typically going to have to bring in 20% down for you to waive impounds, is what that's called. So that's basically those recurring closing costs are going towards an impound account or a reserve account or an escrow account. Those are interchangeable. And basically the lender wants you to pay property taxes, homeowners insurance in advance, so when those are due, the mortgage servicer can pay those out on your behalf, and the lender doesn't have to worry about you missing a payment. So you can get away with not having recurring closing costs by putting down 20%. In some cases you can bring in less, but that's typically what you're looking at in order to waive impounds or escrow or a reserve account. So so you can have your closing costs reduced by getting a credit from the lender, so you can actually increase the rate as high up as you want, really, and get a credit back from the lender. But keep in mind, as you increase the rate, your monthly payment is also going to increase. So you'll have to decide whether, getting a credit towards your closing costs is something that you would prefer rather than keeping the payment lower. So that's one way to reduce your closing costs. The other way you can reduce your closing costs is having your agent or if you're representing yourself, negotiate a seller credit. Basically have the seller credit you towards your closing costs, and you can use that towards your closing costs, which means you'll bring in less money down at the end of the day. Keep in mind, though, depending on your loan amount, there is a limit on how much the seller can credit you, but that's another topic on there. So depending on your loan amount, there is a limit on how much the seller can credit you. So to kind of bring it all together here is that so you have for your total cash to close, you have a down payment and you have closing costs, and you can reduce, you could say, your down payment by getting it gifted by a friend or a family member, depending on your situation. And then you have closing costs, and you can reduce those by getting a credit from your lender or negotiating a seller credit from the seller to credit you. So obviously you're going to need someone to kind of guide you if you're not quite sure how this all works. Hopefully you have someone that is helping you out. If not, we're here in the state of California. We can also help you out in other states as well. So if you have any questions, you can reach out to me. If you have any feedback on this, let me know. And hopefully you found this helpful. Thanks so much. Cheers.